Our next guest sees more trouble lurking in tech. Julian Emanuel joins us in his new role as Chief Equity, Derivatives, and Quantitative Strategist at Evercore ISI. He left BTIG in October. Julian, great to have you with us.
Great to be back with you and the team, Melissa.
All right, so you have your price targets out with your new gig. Your best case scenario, you are one of those strategists, by the way, with an S&P target above 5,000. Your best case is 5509. Your worst case scenario is 3575. In the best case, 5509, what does the backdrop to that look like? You have to have, I would assume, the leadership of technology be in place?
It doesn't have to be leadership as we've known it the last couple of years. It needs to be at least a market perform. But what that really is if you go back, we've talked about this a lot. We've been talking about this a lot for about a year now, all these elements of the similarities to 1999 and 2000. And the critical element here that would get us to that kind of overshoot is if the public, which has been a major player for the last year and a half, it's something we spotted at the end of 2019 before the pandemic, really emotionally embraces. They've put their money where their mouth is, but they haven't really committed sort of every last dollar in the way that was the case in 99 and 00. If you get that kind of emotion, particularly if the pandemic turns endemic at mid-year, that's how you get that kind of overshoot.
So the difference between your base case of 5,100 and your upside case of 5,500 plus is the notion that the retail investor will go head in every last dollar into the stock market?
That's right. Look, we've seen very vigorous participation for the last year and a half without actually the concurring emotions that you tend to get with that kind of participation. If you get that emotional surge and if you get bounce back trades in some of these stocks that we were talking about, areas of the market down 50, 60, 70%. And we're not saying that they're going to be the leaders. They aren't. But if you get those stocks to bounce back, along with the perception that the Fed isn't going to derail the rally in any way, shape, or form, that's how you get that kind of emotional surge.
Hey, Julian, it's Tim. Nice to have you back. Happy New Year. Is any of this scenario analysis a function of inflation staying static? In other words, where do you do with inflation at 6.9 or 7.1 or whatever we're getting this week? And is that part of a downside scenario if it stays sticky?
It absolutely is, because what we don't know is the Fed going to underreact or overreact? And obviously, this whole idea of inflation being caused by a number of factors, supply chain disruptions among them, which is really showing some of the first green shoots of easing up. We don't know how that plays out. But ultimately, to get stock prices to move to those kinds of extremes on the upside through our price target, you're going to need a perception that inflation is going to moderate. We actually do think it moderates later in the year, but stays high for an extended period. But the market in general, given the earnings power, given the economic momentum, can withstand that scenario.
5,100, which sector gets us there? Which sector is leadership?
We actually like value here. We think that the price action you've seen in December to start the new year really carries through for the balance of the year. We think financials look very, very interesting. They've had a great run recently. Those stocks still, in comparison to their weighting, are barely off of their financial crisis lows. Industrial is very interesting to us. They should have been an outperformer in the second half of the year. They weren't because of the supply chain worries. Those are going to abate. That's a sector that plays catch up. And healthcare, defensive and immune to interest rate moves and geopolitics.
All right, Julian, good to see you. Happy New Year. Thank you. Julian Emanuel of Evercore ISI. Guy, I know what you're going to say. You're going to say, I dig Julian. Do you dig what he wants you to buy this year?
You know, it's funny. I dig Julian. You're so in my head, it's scary after 15 years. I'm with him. Listen, I would add energy to that. I'm sure that somewhere in those industrials maybe energy lies, but healthcare to me was an outperformer all day today if you look, some of these big cap pharma names. So I'm not sure those in the collective can get us to 5,500, but I do like those sectors without question.
Yeah, what do you make of Julian's premise that if the retail investor went full on in the market that we get to 5,500. Plus, there's the notion that the Fed won't derail the rally. 5,500, is that realistic under that scenario in your view, Dan?
Yeah, but not from here, Mel. I mean, really need the retail investor, you know, they're the ones that were chasing these meme stocks. They're the ones who are chasing crypto. They're the ones who are chasing a lot of stuff that's down 30, 40, 50%. And I just feel like it's really easy to say that we had all these new entrants into the markets over the last couple of years, and their consumer balance sheets were buffeted and they had nothing to do, and they had easy on-ramps and they had democratization of information, everything like that. That's all fine and good until the stuff that you own gets absolutely bludgeoned. And that's what's happened under the surface. And then if you think about passive investing, that's one of the reasons why the S&P is only down 3%, but yet all of these stocks that individuals own have gotten killed. And so that has to kind of work its way out a little bit. And so you can name all of those value sectors. You can name energy and industrials and financials. They're still not going to get this market to 5,500 at any point in the next 5 years if you don't have those mega cap names. And I know that there's some new ones emerging. I know that Facebook is nearly $1 trillion. I know that Tesla is $1 trillion. I know that Nvidia is 700,000 or 700 billion. And ultimately, though, all of those names, for the most part, have massively outperformed everything else. So I just don't know how you get back up there if you don't have those names participate, but they need to probably rally from lower levels, in my opinion.